Okay, so today we have Hanxi Zhang here to talk about his experience in VC. So I'll just let him introduce himself a little bit. So tell us a little bit.
All right. So, hi, potential listeners. My name is Hanxi Zhang. So, I'm currently a Master of Finance student in Carey Business Schools, and I have some experience with venture capital because I start with my own venture capital company. I'm a general partner of New Do Venture Capital right now. It's a U.S. dollar based venture capital right now. We are still doing our first phase one fundraising, so it's a pretty new venture capital company.
It's cool. So Hanxi, can you just tell us a little bit about, say, how you guys get started, like the little story about that?
Okay, so it's actually to start with venture capital. I never thought that before this summer. So I have this couple friends. We did a startup company. It's it's like O2O delivery company in Michigan. So I kind of have the experience that how do you start a company and how do you do fundraising for over 1 year, and I'm interested in the fundraising and venture capital area after I do the company. So I talked to several of my friends, and we have the same expectations. And since the Chinese market is not getting that well, so I think there should be a lot of hot money that towards international market like Europe and US. So we're kind of using our Chinese resource to target American market. That's maybe one of the reason we started a company. Yeah.
Sounds good. So for now, like, what are you guys interested in investing right now? Like,
Do you mean like focus area?
yeah, what area? Like, what sector are you guys?
Okay, so right now we're focusing on two major areas. One is high tech, and another one is you can call smart home device. It's like anything connect to internet, but it's real objects in your living life, like
Refrigerators, like.
yeah, like smart refrigerators, like smart cooking device, everything that it's connect online.
Sounds good. So can you just tell us a little bit about your size of the sweet spot?
For our advantage, I think because since all of our general partners are Chinese, we come from different background, China and different location. Some of us have some politics resources. Some of us have some business resources. We're pretty much doing stuff is that called we are using our resource to target U.S. market to sell our resource to get lower price for the valuation. So pretty much because most of the U.S. company now when they expand the first country they would think about is China. So we're just connecting Chinese business and U.S. business. So we're kind of like the middleman. Yeah, that's maybe our advantage.
So I assume that during this process of starting business, there must be some interesting stories. Like, can you just share a little bit with us?
Interesting story. I think the most interesting when you're doing venture capitals is you get to meet different teams, different backgrounds, and different fantastic projects. Maybe you won't even think about during your lifetime. I remember someone make apps, and there's nothing sense about apps. It's just saying that you should take a medicine right now. It's just like it's not making any sense, but still a lot of investors doing that because I think nowadays people is more focusing on cultural event instead of like real life events. Yeah.
So, as you said, you're a student at Korea now.
Mhm.
So, do you have any advice for students who want to, get into this VC, industry? Do you have any, say, suggestions that what they should do to have more opportunities?
Yeah, so one really good opportunities is that I'm also the member and the publicity director of the Private Equity and Venture Capital Club of Carey Business School. It's a really nice club. Everybody should join the club, and there's a lot of good activities, and even though we're gonna have a VCIC competition, you got to be the real VC to judge those startups. So we have all kinds of different activities
Like
you
a Shark
can
Tank
imagine.
thing.
Yeah, it's like a Shark Tank, but it's real Shark Tank. In real life, you got to be the VC. So I think the most close experience you can get from Carrie is join our club. Yeah.
Sounds good. Sounds good. So if we, like, if you have time, like, are you willing to, like, say, come to share your experience, like, school? Like, of course, you're from Gary. So if you get a chance to want to hold, like, say, info session, like, to talk about more about your, say, experience.
Yeah, I would love to, but I'm not sure if I'm capable of do that. But
Yeah, you
anyway,
totally
if
do
I
that.
have time, I'd love to do that.
All right. Thanks, Hanxi, for spending your time with us. I'll keep in touch with you. And good luck.
Thank you.
All right, so I have Jon Gosier here. He is a tech entrepreneur. He is a founder of a VC company. What I'm going to do is I'm going to have him talk a little bit about who he is and what he's done, and the overall VC space. So, Jon, first off, I want to say thank you for taking time out of your day to come and answer some questions for me and the people who are going to be listening to this. First off, I want to say, Jon, would you mind telling us about yourself? Please don't hold back.
Sure. So I am a tech entrepreneur, which means I start tech companies with the goal of scaling them and selling them. When people say serial entrepreneur, usually they just refer to the fact that once you do that once, usually you have the urge to do it again, and you're always coming up with new ideas. And that's how I got into investing was after I learned the ropes as an entrepreneur. I wanted to be able to help other entrepreneurs scale their ideas successfully.
That's great. That's great. That's great. So leading off of that, let's talk about what you've done. What have you done in the past, and what are you currently doing?
Worked on a couple of things. So my first company I started in East Africa. It was called Africa. I've started two or three data companies, actually three data companies. So MetaLayer, which is a company Comcast invested in, D8A, which is a consultancy, and then my new company, Predictive Pop, which does music data analysis for the music industry. And I've started three funds. So one when I was in Africa, one domestically called Third Cohort Capital, and then the most recent and largest is a $20 million venture capital firm called Cross Valley Capital.
Okay, now for before we get to your newest venture, I wanted to touch on something. I kind of want to use this as a time to touch on the African space. I kind of wanted to see what you from your point of view, how is the investment environment over there? Specifically, how's the VC environment over there? I mean, is it something that's kind of growing? What are you noticing from within that space?
It's definitely growing. It's very different from when I first moved to Africa to Uganda in 2008. Since then, I would say traditionally, what the private markets in Africa have been funded through large venture capitalists, sort of like looking at deploying capital at hundreds of millions of dollars and up, or private equity firms that are looking to fund infrastructure projects. And the reason why they traditionally did large capital investments like that is, number one, because of the way most countries have structured their aid efforts to Africa, that doing high value development projects on the continent has been insured. It's been something where you can go and find partners, usually governments, that have that kind of capital to match or support a project. So even though it sounds like a lot of money, it was always very low risk. So from the 60s up until the early aughts, that was the majority of what you saw in Africa finance when it came to financing businesses. What's changed is people have seen opportunity at a lower end of the market. So earlier stage companies, startups, mom and pop shops, companies that are hitting growth stage. So all of that has become the focus because it's sort of a new opportunity for investors. The other thing that's changed that a lot of people don't realize is more Africans are investing in African deal flow now than before. So for all of those reasons, venture capital has become a viable mechanism to deploy capital in targeting Africa.
So let me ask this: what are you currently seeing coming out of that space? That you think is really cool.
Yeah, we mean industries in Africa?
Yeah. Industries in Africa. In terms of where is a lot of the capital? Where's a lot of the venture capital funds? Where are they currently looking? Tech, healthcare, anything that really sticks out to you in terms of
tech
projects?
Definitely, but that's pretty broad.
Mm-hmm.
I think the most interesting space for Africa is probably just new. Definitely energy commands a lot of attention. Energy, medical, and infrastructure projects are still interesting. But I would say what's really new is stuff that's more focused on the African consumer. That tends to be the type of stuff I'm interested in Africa. I mean, you've got 327 million middle-income Africans who weren't considered middle income, maybe a decade or 2 decades ago. So this is a truly emerging market that is, presenting an opportunity for new customers. I mean, so when you see companies like Google, Facebook, Microsoft, Walmart, they've all invested in Africa heavily over the past few years, like since 2010. And it's for that reason, because the African middle-class consumer is accessible like never before.
Now, what are there when you think of when you think of all the good things that are going on, all the opportunities that are happening, is there any countries or specific countries that stick out that kind of come to mind, or is it just kind of real? Is it kind of just real broad?
Sorry, can you repeat that?
Yeah, so I was asking in terms of opportunities. I was asking where are there any countries that stick out to you that come to mind that have the most, that are really making true progression?
Well, obviously everyone is aware of the South African opportunity, so I'm not going to speak about that. Right. In sub-Saharan Africa, though, Kenya is definitely a leader in the market. Nigeria as well, for different reasons, though. Nigeria just has the sheer size, as just a huge, I think 170 million people. And that just, it can't be ignored. That sheer population size can't be ignored. Kenya doesn't have nearly the amount of people, but it has, because it has traditionally been one of the most important ports in Africa, way back during the shipping era. And then these days, it's one of the hubs for planes and for businesses. It's become like the other sort of darling of the continent. I would say after that, Ghana. Ghana has a growing but still somewhat nascent tech sector. And then some of the North African countries, Egypt, Morocco, definitely are getting a lot more attention.
So if someone was to ask what would be equivalent to the Silicon Valley here in Africa, what would you say?
I wouldn't make that comparison because it's comparing apples to oranges, right? Like Silicon Valley, is like the heart of the U.S. The U.S. is a single country, so every African country is so different. They all kind of have their own sort of equivalent of a Silicon Valley, if that makes sense.
Excellent. Yeah, it does. That's the one thing they say is definitely whenever you're, that's kind of like one of the cardinal rules is, whenever you decide to kind of go and do business over on the continent, it's very important to look at each country individually. Now, what I want to do is I actually want to transition and actually talk about your newest venture, Cross Valley. Let's start with that. Let me ask you what is the primary objective of this new venture in terms of funding size, in terms of areas of opportunity. What would you say is your overall goal with this?
So we don't have an industry focus with Cross Valley. We invest up to Series A. So the sort of stages of finance that companies go through is friends and family, which is usually where you're raising small amounts of capital, usually less than $50,000 from your friends and family. Seed, which for some companies is the same as their friends and family around, but for most companies, it's the first time you go out and start talking to investors, like pure investors, people who you likely didn't know before you started the business. And then there's an area called Bridge Capital, which is helping companies that have raised some money, but who haven't raised the big money that you would do in Series A yet. And it's actually the hardest phase because that's where you're going from startup to sort of big company or maturing company. And it's like the awkward stage of a funded company. And that's followed by Series A. Series A is like when you really start to be considered by the more mature investors and others as being kind of well on your way to a healthy exit or IPO, although that's never guaranteed. So our fund, in terms of how we've allocated our capital, the majority of it is going into bridge deals. So helping companies make it through what is the toughest phase, in our opinion, of making a company work. The reason for that is, they've shown some promise, so they're not just spring chickens, they're not just raising their first money, and they're also not so mature that, in the context of venture capital, $20 million is nothing. It's literally called a micro VC fund. So the amount of money that we have to put into a deal pales in comparison to, like a big firm like an Andreessen Horowitz. So we have to be very smart about getting into companies as early as possible and maximize the value of our capital so that we're not getting sort of pushed around and pushed out of the rounds by larger investors. So that's why you see a sort of a plethora of these new micro VC funds. So micro VC is anything less than $50 million. And they all tend to focus on the same section of the market, which is getting into early stage companies as early as they possibly can, because when it gets to the later rounds, they don't have the same leverage as a larger investor would.
Now, would you be able to disclose, or in terms of your what your sweet spot is in terms of deal size, a range, maybe in terms of what when you issue funds?
Yeah, so the largest check we'll write is about $500,000 for a Series A deal. That's usually not enough to lead a Series A, but it's enough to participate. For Bridge, it's up to 350, 375, something like that, thousand. And then early stage, we'll write checks up to 150.
Let me ask you this: if someone who came up to you who was a student, let's say in a business program, an MBA program, or a master's of finance program or anything like that, and they came up to you and asked, "Hey, how can we break in to the venture world? What would be the best piece of advice you could give them?"
I would say as quickly as possible, just demonstrate that you can either, one, find access to good companies that will make someone a lot of money, or two, use your own money and invest in those companies. It's an extremely exclusive world. It's even more exclusive than investment banking and pure private equity or hedge funds. And the reason being is because there is no real way in other than either going to work for an existing firm or starting your own. And outside of that, I mean, there's very few programs that are sort of geared towards placement in the venture capital world. There is one program that I know of. It's the Kauffman Fellows program, but it's really expensive. And then there's also the, a couple of schools have some programs, but it's really about connections. And it's also it's so much about your expertise at either networking your way to these companies or just inherently having access to companies that no one else does. That it's less about your depth of knowledge on finance and more about that. And that's what makes it really hard, because that's really hard to prove to someone. It's not like they can sit you down in an interview and figure that out. You kind of have to prove it by doing, which is why it is what it is. It's either you're starting something of your own, you're working your way up, thereby proving that you can do this, or you just become known for your expertise by other people who do have capital, who either believe in you or push you in going a certain direction.
And my last question to you, Jon, I know you spend a lot of time. First of all, I know you travel a lot, but you spend a lot of time in Philadelphia as well. And we're pretty close by you being there and me being in Maryland. I wanted to ask, if you were ever in Maryland, would you be interested in actually sharing your experience, at the Johns Hopkins Carey Business School?
Absolutely.
Okay. Excellent. Well, Jon, listen, I appreciate you taking time out of your busy day to answer more than a few questions. Good luck on everything. And
thanks.
We'll be in touch.
All right, sounds good.